GameStop has finally entered the chat. The company announced an aggressive plan a la Michael Saylor to begin stacking Bitcoin on their corporate treasury. This is huge, but how much Bitcoin could the company realistically buy? And what does yet another large company making a bold move into Bitcoin signal to the market? As the dominoes continue to fall in Bitcoin's favor, we look at how this latest catalyst could mean a sustained and multi-year Bitcoin bull market. Supercycle, anyone? GameStop has officially gone from meme stock sticking it to Wall Street to financial technology heavyweight sticking it to the entire corrupt monetary system. At least 4 years too late, but also right on time, GameStop finally put plans in motion to add Bitcoin to their balance sheet. After a unanimous board approval, the company announced yesterday that they are raising $1.3 billion to buy Bitcoin. They're taking a page directly out of Michael Saylor's strategy by jumping right in by borrowing cheap capital to stack the world's only finite digital commodity. Speculation that they would make this move started when GameStop CEO Ryan Cohen was pictured with Michael Saylor in his Miami waterfront mansion in February of this year. Shortly after, Strive Asset Management CEO Matt Cole wrote a public letter to GameStop's leadership urging them to adopt a Bitcoin strategy, saying, "We believe GameStop has an incredible opportunity to transform its financial future by becoming the premier Bitcoin treasury company in the gaming sector." GameStop reportedly has $4.8 billion in cash, but as of now, it's unclear how much of that they plan to turn into Bitcoin. Peruvian Bull, who's been one of many Bitcoiners calling on the company to invest in Bitcoin since the meme stock craze of 2020, posted this on X. GME has around 10x the cash and is 10x the market cap of MicroStrategy when they started the Saylor strategy in August 2020. Are you ready? Ben Workman, who is the resident expert on corporate Bitcoin accumulation strategy, posted GameStop's detailed balance sheet stats, saying, "While many seem confused, based on these figures, it seems like they're getting themselves in position quite nicely while capital is cheap to generate volatility via leveraged exposure to Bitcoin on the balance sheet." If you want a deeper dive on what GME can do to maximize their Bitcoin holdings, Ben will be on Swan Signal Live tomorrow at 11 a.m. Pacific, 2 p.m. Eastern. You definitely don't want to miss that. But what's even bigger than a single company announcing that they are adopting a Bitcoin strategy is what this signals to the rest of the market. What was started by MicroStrategy in August of 2020, continued with Tesla in 2021, Metaplanet last year, and now GameStop. It's estimated that as much as 80 publicly traded companies around the world have some form of Bitcoin on their balance sheet. What Michael Saylor pioneered is quickly becoming a global trend, and the positive influence this strategy has had on these companies' stock performance is becoming impossible to ignore in the corporate world. It's becoming more and more clear that this strategy isn't just for companies struggling with growth. In a world of increasing economic uncertainty, skyrocketing sovereign debt levels, and rising inflation, Bitcoin is more and more being seen as, to quote BlackRock's Larry Fink, a flight to safety. In his latest 2-hour interview with CoinDesk, Michael Saylor clearly outlined what the Bitcoin strategy means for businesses and corporations of all sizes, and how it stands to completely revolutionize the entire financial system.
Bitcoin represents the most certain thing in the financial universe, right? And Archimedes said, "Give me a lever long enough and a place to stand, I can move the world." Bitcoin is the place to stand. I'm not trying to change Bitcoin at all. I'm just standing on it. The question is, what am I doing? I'm trying to digitally transform the capital markets. The world that I'm changing is traditional finance world. And here's my observation. Equity capital markets, for the most part, value companies based upon a promise, an expectation of future cash flows, which another way to say it is the companies have no money, but they promise to get some money over the next 20 years. And we estimate how much they're going to get. And that's the value of the equity. Our company's position is we actually have the money, right? So we have the money now. Maybe you can value us a premium, but right now, 65% of the market cap of the company is the money. Whereas if you look at a typical company like Apple or Microsoft, 5% of the company is money and 95% is just expectation that they might get money in the future. Why is that? That's because money is toxic if you're using bonds, treasury bills as a capital asset. So if the money that corporations hold is toxic, if it generates a 3% after-tax return, and if the cost of capital is 13%, then you destroy 10% of your capital a year. That means that every conventional company is capitalized on toxic money. And so my mission is to capitalize companies on virtuous, clean money. Your credit rating is based on the money that you expect to get to pay back the bond. Okay. We're in the market, say we have $45 billion of actual money and we want to borrow $1 billion. And a credit rating agency would say, you don't have any cash flows, so we don't know if we can give you a credit rating. And of course, the joke is we actually have the money. We have $45 billion. We want to borrow $1 billion. I have $5 billion in collateral. I want to borrow $1 billion more. I'm 5x over collateralized. You could literally give me a credit rating based upon the money I have, but the entire fixed income market, which is $300 trillion of corporate bonds, preferred stocks, structured instruments, and the like, that entire credit market is based upon credit ratings and the theory of credit that's based upon loaning to companies that don't have any money to pay it back, but they promise that they'll get the money in the future. So my company is issuing bonds and issuing preferred stock that's backed by Bitcoin. And our mission is to create a new theory of credit. We want to issue billions, then tens of billions, then hundreds of billions, then trillions of dollars worth of credit instruments that are backed by real money.
What Saylor outlines here completely changes the game in traditional finance. Instead of companies being valued on future cash flow potential, they can now be valued on the amount of real money that they have right now in the form of Bitcoin. More and more companies are waking up to this reality, and it's just a matter of time before the Apples, the Microsofts, and the Googles of the world catch on. This trend of corporate adoption is just one piece of the huge pie that represents the massive potential for Bitcoin's growth over the next few years. We covered the very real potential for the US government to start aggressively buying Bitcoin in the last video. That's obviously another huge catalyst that will also increase the chances of larger companies jumping on the bandwagon. But there's also the ETFs, which have kind of faded into the background with all the hype around corporate and nation-state adoption. Bitwise CIO Matt Hogan was on Natalie Brunell's show recently, and he made it clear why we definitely shouldn't fade the continued growth of the Bitcoin ETFs in 2025 and beyond.
Before the Bitcoin ETFs launched, the most successful ETF of all time gathered $5 billion in its first year. That was the ceiling. ETFs did 37, right? 37 is so much more. I was optimistic they might do 10.
Yeah.
I thought it was going to be huge. We had worked on it for 6 years. So of course we thought it would be huge, but $37 billion is crazy. All that said, I bet we do 50 this year. I think people, if they think it's like this bell curve and down we go, it's not. Every ETF almost in history that's been a success does more in year 2 than year 1, and more in year 3 than year 2, and more in year 4 than year 3. For the reasons we started talking about at the beginning, half of the market can't even buy this thing yet. And the other half is just learning. And the people who bought it in the first year are probably going to double down. Think about the first time you bought Bitcoin. Do you own more today than you owned then? Of course you own more. That's just the direction of travel. So I was blown away, but I think this year will be even bigger.
So to recap, we have the historically successful Bitcoin ETFs doing even bigger numbers in 2025. We have the US very likely aggressively buying to add to their strategic Bitcoin reserve. And we have a growing number of corporations adopting the Saylor strategy to acquire massive amounts of the world's most scarce asset in existence. As market prophet Josh Mandel posted yesterday, a continuous influx of new pipeline Bitcoin buyers is precisely the type of development that can lead to a supercycle. I've been saying the obvious for months now, that this time really is different. It's becoming increasingly obvious that the previous Bitcoin cycle dynamics of huge boom, blow-off tops, and massive corrections is looking less and less likely to repeat. So if we were in the beginning of a Bitcoin supercycle, which basically means we have a more slow, sustained, and up and to the right price move over a longer time period. If we were on the verge of something like that, what would that look like? I argue that it would look a hell of a lot like what we've been seeing unfold over the last year. I'll leave you with Bitcoin OG Tur de Meester, who posted this today. Bitcoin will moon. It's the only institution strong enough to absorb the coming eruption of panic and hope. This is by far the best risk-adjusted time to buy Bitcoin ever. So get started on your Bitcoin journey today with Swan. Visit swan.com or download the app by searching Swan Bitcoin in the App Store. Swan has the fastest and easiest onboarding experience in the entire industry. You go from sign up to buying real Bitcoin in minutes. And don't forget to check out our new premium Bitcoin rewards credit card, which we plan to launch soon. Visit swan.com/card to sign up and get priority access today. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think of the supercycle theory? I'd love to hear it, so leave a comment below with your thoughts, like this video, share it with friends and family, subscribe to the channel, and hit that notification bell so you don't miss the next video. And don't forget to tune in to Swan Signal Live tomorrow at 2 p.m. Eastern for a deeper dive on the week's news. Thanks for watching, and remember, TikTok next block.